Good afternoon, everyone. In today's video, I'd like to take a look at Snowflake and specifically talk about the one trigger I'm looking for in order to get interested on a bullish scenario in Snowflake. That's to say, I expect to see the same trend that we saw earlier prior to the earnings movement continue in that same bullish direction, hopefully taking out 429 in that next move up. Now, before we do that, let me first call out this blog post, this deep dive. It's written over at hypergrowth.com, which is run by a fellow by the name of Mujir. That's his online name. And he does a really nice deep dive of Snowflake for anyone who'd like to learn a bit more about the business. On a high level, just using numbers here, let's start off first with the revenue growth. The year over year has been absolutely insane. 122%, 148%, 138%, 152%. All of this is a good sign. You come up here, you also see their net expansion rate, 158%. That's a good sign. You take a look at the revenue on their backlog, you take a look at their most recent revenue growth rate. Everything from a number standpoint looks impressive for Snowflake. Now, that's a story that I think has been told quite often, so we won't dive too deep into that, but I will make sure to link this article for anyone who'd like to read a bit more about it. It takes about an hour to read, but I think it's well worth the time. Now, coming into our charts here, we'll talk about first the trigger that we're looking for, and then, knowing that Snowflake is a bit more of an expensive stock, we'll then dive into the option chain to see if there's anything there that we can construct some sort of an interesting trade to ski the risk to reward in our favor. Now let's start first with the technical trigger in Snowflake, and then we'll draw our fibs and then move on to the option chain. Now in terms of the technical trigger here that I'd be looking for, that's for this market pulse line, which is a free indicator. I'll make sure to link it in the description box. I'd be looking at this to go from a period of green to then gray to red to gray to once again green. Once we see that first break above the green, I think that would be your sign that, hey, we're now expecting Snowflake to really start to continue trending up higher. We also had the confirmation of our first, overbought signal right here, which I think confirms this overall down movement that we saw in Snowflake. It's that first move up. Once we see this market pulse turn green, that would be the second real confirmation trigger sign to get in, however you want to look at it. And that's what I think makes Snowflake fairly interesting here. So that would be the sign. We're looking at this market pulse line to turn green. Now, if I take our Fibonacci tool right here, we use our swing high to our swing low of that swing, then our 50% mark right here takes us to right around 346.50, which we can round to the 350 zone in terms of a nice even round number. And along the way, we see resistance at right around 327.03 and also 302.94, which is fairly close to the 300 round number. So for a shorter term trade here, I'd be looking at that 300 mark. My eventual move that I'd be targeting for the swing trade would be towards that 350 mark, really 346.50. And then hopefully here we stall out for just a little bit. And then from that standpoint, once we stall out, we resume this trend, looking to ultimately break above 429 and take us to the 1272 at 473.88. Now, one other reason why I find Snowflake to be fairly interesting here is it looks like it's a bit more contained or sustained price movement, right? So if we contrast this with, say, another tech name here like Okta, you'll notice Okta, if you take a look at the chart, really just looks like we've been making a straight move up. If I use the trendline tool from that March period, Okta's up, close to 237 or so percent. If we come into Snow, you'll notice Snow looks a bit more different. It looks like we have a bit more of a sustained pullback, an opportunity to get in where price action doesn't seem as extended as I think you'd find it to be in many other places in the market right now. Now let's come into the options chain. Specifically, I'm looking to try and see where we have a good amount of open interest with that 300 zone. That would be the shorter term trade, looking at either something like a vertical, maybe selling some premium there, or even a butterfly. And then the overall term movement from the option standpoint here, 346.50, which is right around a $60 expected move from where we're currently at. So we'll see which chain is doing a good job of capturing that in terms of expiration, and if we have open interest there supporting this. Again, for anyone who can support it, I still think that using the stock outright here is a cleaner way to try and play this, not needing to worry about the pricing spreads that you see with the options market in Snowflake. So coming inside of Snowflake here, it's the March 5th series, the 12 days to expiration, where I think you have a good amount of open interest right around that 300 zone. Makes for an interesting case. The options on their own are 1,600 to 1,800 bucks, so kind of expensive there. But if I right click here and we do something like a butterfly, looking to try and pin a move right around the 300 mark, and we expand this to something like 295 and then perhaps let's say 305, so we've given it some room. That's currently going for, you probably wouldn't get this credit, but let's say you could get it somewhere in between, be right around $1 if you could get it for that much. So trying to risk $1 to try and make $4. So if we add this to our Analyze tab right here, that could be one interesting trade. The other interesting one would be to try and be a seller of that 300. So coming back inside of our option chain here, looking at something like the 295, and then the upper bound is the 300 that we're looking to sell. That's currently going for $1.35 to 350. So if you could get that closer to the mid range, I think that would also be an equally compelling trade idea. So that's one there. You'll notice the implied volatility in this series is 97%. So the other way that I think you could potentially look at playing this, which may be a bit risky for some, but that's where selling a in the money put credit spread here. So selling the 300s, trying to buy the 295s to cover that, you're currently collecting a premium of right around 370 bucks, risking 130 to try and play that move. So a very similar trade, but you get to be a seller of theta, trying to take advantage of this higher implied volatility, where we don't have the IV percentile there, but just using the actual raw numbers here, 97% implies a fairly high implied volatility. Now, that was our 300 mark. The next one we said we wanted to target was the ultimate move of 350. That was a plus or minus $60 expected move. So if we take a look at the expected move here, that first time we really meet that $60 expected price movement is the April series. So let's start first with the April series. And there you notice very little open interest, so nothing too exciting there. So if we close this up, open up the May series instead, then I think that's where things start to get a bit more interesting here. Our first batch of higher open interest is between that 300, 320 zone. We talked about that earlier. That would be a safer way to play this, but if we did 300 here and then you expand this to something like, say, 320, you'll notice that's a bit more expensive, 6.15 to $8 to try and capture the spread. Max spread is 20 bucks wide, so you're looking to basically collect right around 1,400 for risking around 600. So that's one option. However, if you come out a little bit further out of the money here, 350, 360s, we repeat that same idea. So we look at 350, 360 here. That's going for a bit more of an affordable price there, 205 for a $10 widespread. Looking to risk right around 200 bucks to make 800 bucks. I think that's a bit more compelling, knowing that we have the expected move. Now, the third idea that I'll talk about is really a combination of the two different expiration series we've been talking about, and it's using a diagonal here inside of the May series, looking at buying something like, say, the 350, and then selling the 350 in the March series, and trying to repeat that one more time after you get it with the April series as well, where in theory you've been able to buy one call in the May series, and then sell both the March and the April 350s against it to really try and reduce the cost of that call. To give you an idea of what that looks like priced out, if I start by, say, buying the 350 in May here, and then we come into the March 350 and I try and sell something against that, you're collecting almost $8 here for trying to sell that. Reduces the cost almost instantly down to $9.95 from anywhere to between right around 1,800 bucks right now. So that's one option. And then if we can repeat that one more time, that should hopefully help you end up with a very inexpensive call in Snowflake, looking to try and play this move up to 350 and beyond if we do get the opportunity to do that. Now remember, the trigger condition that we'd be looking at for any of these trades is still for the market pulse to signal to us that, hey, we now have this trend shift in Snowflake where any one of the three strategies we talked about makes a whole lot of sense to deploy, or just buying some of the shares outright as well if your account can handle that. And then finally, the very, very last thing that I'll talk about here is if we layer in the triple squeeze indicator as well, just to get an idea of if we have a squeeze right now, you'll notice we do have a squeeze. The momentum has shifted from negative to positive. And so far, we've just been really decreasing momentum, but on the positive scale, where if we start to see Snowflake ramp up here, then the squeeze firing long would be a very interesting proposition, taking us again into that same 350 zone. So hopefully that helps to give you a few different ideas in terms of things to look at, technical triggers, different strategies you could deploy based on your account size to try and take advantage of this move up in Snowflake if we get that after the trigger conditions are met. All right, take care everyone, good luck trading, and we'll see you in the next update.